Hello and welcome to your NAB Trade reporting season top 3. I'm Andrew Gagan. Well, the Commonwealth Bank has reported record first half cash earnings thanks to robust growth in lending and deposit volumes. Cash profit after tax rose 6% in the 6 months to December to $5.45 billion, which was above estimates. Now, the CBA's net interest margin, the difference between lending and deposit rates and a key measure of profitability, fell 4 basis points to 2.04% from a year earlier, due to intensifying competition among lenders to attract borrowers. Operating expenses rose 5% to $6.72 billion, with more than $1 billion spent on CBA's tech revamp to enhance AI capabilities, which is a 10% increase. Shareholders will receive an interim dividend of $2.35 a share, higher than last year's payout and above consensus. CSL has seen a dive in half-year profit, which has been reported just hours after the healthcare company announced its chief executive was leaving immediately. Statutory net profit fell 80% to $401 million. That's after one-off restructuring costs from a corporate restructure, impairments and policy changes in the US and China. Revenue for the first half fell 4% to $8.3 billion amid lower blood plasma and vaccine sales. It plans to write down the value of intellectual property in its iron deficiency and vaccines operations by $843 million. Investors will get an interim dividend of $1.30 a share. And CSL did announce after the close of trade yesterday that Chief Executive Paul McKenzie is stepping down with immediate effect to be replaced by former CSL Senior Executive Gordon Naylor on an interim basis. SGH has posted a 2% rise in first half net profit to $518 million. First half earnings were flat at $844 million, but up 22% on the second half of FY25. Cement and asphalt business Boral was SGH's best performing business, with EBIT up 10% in the period to $284 million. Earnings at WestTrac fell 1% to $348 million, while Coates saw a 9% dip in earnings before interest and tax. Shareholders will receive an interim fully franked dividend of 32 cents a share. That's up 7% on the prior payout. Let's hear from SGH Chief Executive Ryan Stokes.
The 7 criteria we have around, we still think industrial businesses are a good fit. Those that are in Australia with scale, privileged assets, they're the elements that we like. And then, is there a value opportunity for us? That's part of the criteria. So, always looking at and exploring opportunities.
And that is your NAB Trade reporting season top 3.